Good morning, all. CamelbackTrading.org coming to you this Monday morning, August 17th. We're looking at the last 4 days of the SPY ETF's market profile here on Window Trader. First off, I just want to mention that we had a great webinar Saturday morning. It was very educational and informative. I want to thank everybody that attended. Again, if you'd like a recording of it, just look me up on Twitter at Paul Asmar 5. It'll be $20 for non-members in my room. I think you would find it very helpful in your trading. Okay, let's get to what's going on today. And there's a couple of key phrases I'm going to use, but more importantly, explain them, because phrases mean nothing unless we know the context behind them. I basically said on Friday night, we had an inside day on Thursday. I am treating Friday as an inside day, since if we had come out of it in A period, it would have meant a lot more than the mindless shorts pushing it down in M period. Okay, so let's go over a couple of key things and what they mean. First and foremost, what's been played before affects what happens next. Well, what does that mean? Well, what's been played before? Well, basically for the last 4 or 5 days, it's been like a bad rerun of a movie, as week longs have come up, failed each and every time, only to have the shorts, after the week longs are out, attempt to push it down. All I saw on Twitter and Instagram and other things was after Friday close, oh, the buyers are done, we're going down now. What's been played before affects what happens next. Will this now be the same thing? Possibly. The next one is traders will do what's worked until it doesn't work anymore. Listen to the first word of that phrase, traders. This isn't traders. These are mindless machines, algos pushing it up, and uneducated traders that continue to not see the bigger picture as they continue to get long up here, and then before they realize it, it's too late and they get flushed out. And I'll make you a pretty good bet that most of them that are getting flushed out on the longs are also piling in on the shorts and getting whipsawed on both sides. So yes, traders will continue to do what's worked until it doesn't work anymore, but the educated ones will see what is going on here. And third, inside days, you monitor when you come out of it, whether it's to the upside or the downside, you monitor it for continuation, and I'm telling you, just as importantly, lack of. And with these small ranges we've had, lack of can always mean a total reversal. So what are we looking at this morning? Well, first off, the destinations really quick. We had a price probe Friday, right? A's low right now within a little over an hour to go, about 70 minutes. That price probe is being firmly rejected. Then we had 9 wide at 337.02. Well, if we open above that, it becomes a downside destination. And remember, you talk about nuances. Now, I know the ES POC was lowered on Friday. SPYs was not. Thursday, POC wasn't lowered, even though we flushed. The 11th, POC was never lowered, although we flushed all the way down. These are nuances, folks. This is telling you who's involved in this market. It's telling you the mindless week longs getting out and the shorts attempting to pile in. So that would be a downside destination. And above that, we have Friday's high, which is 337.42, which is also a poor high. And then we have 337.82, 9 wide from the 13th. And then those two daily highs, 338.25 and 338.28 weekly high right next to each other. And then you should have the other ones above that to the all-time high. For the downside, we don't have anything. Well, we have the POC now. And our pre-market low right now is 336.13. Then we don't have anything to yesterday. Friday's low of 335.62, 335.43, and the weekly low of 332.01. The pre-market high right now is 337.70, so just below where we're trading. So what's the game plan for this morning? Again, inside day, you go with it and monitor it for continuation or lack of. So what does that mean? Well, if we are to gap higher in the next hour, I would look to take a call play. If the gap gets filled, I'm out of that trade, because that is what? That is lack of continuation. Doesn't mean it can't come back out, but at least initially it would be failing. If you get continuation, these two daily highs should fall rather easily, as they're very close to each other. And then above that, I have a daily high, poor high from back in February, which should also fall rather easily, and then the all-time high is right there, basically. So if we come out of this to the upside, I'll be looking to take a call play, plain and simple, and I'd be out if the gap fills, and then wait for more market-generated information. If we do gap high and we get to these two destinations, that's when I start peeling off. Then I peel off at the daily, a poor high of 338.64, 9 wide of 338.69, and then nothing's there until the all-time high. If you start one time framing up instead of peeling off, you could add on, because odds are you're certainly then going to get the all-time high with higher value if you have a gap that's holding and one time framing up. So that's a call plays. Put play, we gap, fail and come back in. Well, then the odds are you're going back down to that POC, so you could take a short. Or in the next hour, you don't gap higher, fail at Friday's high, excuse me, take a put play down to the POC. And then what becomes very, very important? You got it, M period. If these buyers fail up here again, right? They failed, you name it. You get into M, you'll trade M's range. So those are things to look for, especially if you start one time framing down in B period. Value now is unchanged. You get accepted into M. I would certainly take a put play. I know my out is M's high. These are all early plays. You're getting these up-to-the-date trade ideas and a play-by-play all day in CamelbackTrading.org's voice channel room. And then quickly on the charts, I'll just look at the weekly and the daily. So what's the weekly telling us? It's very healthy. We're one time framing up 6 weeks. We're above that previous week's high. Certainly you obviously need to get above last week's high to get the all-time high. I can't imagine, I've said this last week and I was wrong, that if we take out last week's high, I can't imagine we do not get the all-time high. And then again on the daily, this is the one that has to move before the monthly and weekly go anywhere. 3-day balance, basically 2 days of inside day with very small ranges, very light volume. Volume is no doubt an issue. We're down to 56 million as our average. It is no doubt summer trading. At least these next 3 weeks, the last 2 in August, probably the 1st in September after Labor Day, I expect this type of volume. That does not mean we can't get the all-time high. It does not mean we can't have some volatility. But I think over these next 3 weeks, you're going to see this type of volume more often than not. Good luck trading today. Have a great day, and we will recap at 4 p.m.